Hello, everybody. So I am going to take the win today. The Nasdaq is down, S&P down, but MSTR and Bitcoin-related stocks are up nicely today, and so we will take the win. We will celebrate. So of course, strategy up nearly 6% on a day where the Bitcoin Trust ETF IBIT is only up 1%. So that's outstanding performance, nearly 6 times as much. We are bouncing back in MNAV. The dashboard on strategy.com shows a 1.63% growth in MNAV. I actually think it's a little higher. If you go on Strategy Tracker, you can see a clear trend, a clear direction of the MNAV going back up. If you go on BTC Treasuries, we are at a 0.986. This is live, right? We were at a 0.92 yesterday. And so even if in after hours we're down like a little more than 1% because Bitcoin is at 92.5, Bitcoin spent most of the day above 93. And so that is a celebration. This is good stuff. Sailor made another appearance, and I don't know what's going on. This is the second time that Sailor makes an appearance on a show, and he's happier, more relaxed than ever. I don't know what's going on. It seems like he thrives when there is turmoil. That's all I have to say. And some of the stuff that he's dropping in these interviews is pretty crazy. He says, we're engineered to withstand an 80 to 90% drawdown. If Bitcoin doesn't go anywhere, we can last about 80 years, right? That's the whole idea of a BTC rating. A lot of these preferreds are issued with BTC ratings of, 8 or 10. Some of the converts have a BTC rating, nearly 100. At nearly 100, like how much more cash do you have on the balance sheet to pay back the debt? And of course, spending a second on this, regular viewers will be familiar as to why this is. When you say we're engineered to withstand a 90% drawdown, well, trust me, if there was a 90% drawdown in the price of Bitcoin, the common would drop like a rock. It would be really, really awful for the common if that were to happen. But why are they engineered to survive? Why is MSTR engineered to survive a 90% drawdown? Because the preferreds have a dividend. The dividends, for most of them, are declared by the board quarterly. In the case of Stretch, the dividend is declared monthly. And what can you do with those dividends? Well, for example, for Strife, you can just skip it entirely if you needed to. Some of them are cumulative, like for Stride, I think it's Stride or Stripe. Anyways, for one of the higher preferred, it's cumulative. I.e., they can still skip it, but it cumulates. They can also elect to pay the dividend in the form of shares and dilute the common. It's the preferred. The preferred is equity. The money received via the preferred is actually equity and not debt, which means that if there were to be a 90% drawdown in Bitcoin, they could skip those payments. That would hurt the common. They could skip those payments and pay them whenever Bitcoin rebounds. That's the reason. And so even Stretch is the the iPhone moment for Sailor. Stretch is a monthly declared dividend. So if there were to be a problem, you could drop the dividend of Stretch. So that's why Sailor talks about how the company is engineered to withstand a major drop. Let's talk about Stretch a second. Stretch is bouncing back very nicely today. 96.69 after hours. We might be at 97 tomorrow. And in my view, we'll be back at 100.01 in no time. Why do I say that? Because some positivity on the Fed front on the market today, some positive commentary from various people in power. And what do we see? Polymarket is showing now a 25 basis point again, 52% of a 25 basis point. My expectation, especially with first day data, my expectation is that we're still getting a 25 basis point cut. If we get a 25 basis point cut in December, that means that Stretch should go back up, because remember, the yield of Stretch is set in relationship to SOFR being the overnight rate of the Fed. If the Fed doesn't drop the rates by 25 basis points, that means unfortunately Saylor has to increase the rate of the instrument for it to reach 100. I think Saylor and myself, and we're all counting on a rate cut to make Stretch more attractive. Organically, hopefully, over time, Saylor's not going to have to touch the rate of Stretch much, because Stretch will naturally become more and more attractive, naturally, as the interest rates drop, as the SOFR, as the interest rate at the Fed drops and continues to drop, which, is inevitably going to drop in May 2026, in my view. That's my big day. That's my big deadline as to when I think this rate is going to drop a lot, perhaps 100 basis points whenever we get the new Fed appointee. That's what I'm hoping. Anyways, I want to talk briefly about Mara. Mara's up 3%, but a lot of miners are up today. Like you have that Wolf up 8%. Riot is up. CleanSpark is up. A lot of the miners are up today, up more than Bitcoin, that is. And so part of the reason, the miners have grown into these hybrids now of you're a Bitcoin miner, but you're also an AI play. And when I look at the valuation of the miners, Mara, of course, has never really gotten much credit. I mean, it got a little credit like 45 days back when it was trading near $25 a share. But other than that, it never really got much credit for its AI and its energy assets. It's very unfortunate. I think at one point the market will be a weighing machine with Mara at some point, right? But if you look at a stock like CleanSpark, it's the precipitous decline of CleanSpark the past 2 weeks has been insane. Like, I consider CleanSpark to be cheap. It erased all of the gains as if AI was never going to happen, as if the pivot to AI was never going to be a thing. Keep in mind that CleanSpark has 2 data centers that I can think of, one near Nashville, one, 3 of them. I guess no. It's one near Memphis and they have one near Atlanta. There you go. They have 2 big ones. One near Memphis, one near Atlanta. They're very, very, very marketable for AI applications. The market has entirely forgotten about that. But if you look at a pure play data center like Nebius is up 5%, and it was up 5% yesterday. So Nebius has bounced back nicely over the past 2 days, because the market, I think, is starting to realize that their freak out about AI is unwarranted. We had this deal today, I think, that flew under the radar because people are spooked by the NASDAQ dropping for something like a 4th day in a row or something. But Anthropic valued at $350 billion following investments from Microsoft and Nvidia. $350 billion valuation. Anthropic. They make Claude. That's the chatbot. Claude, that's one of the leading chatbots, not nearly as famous as ChatGPT. ChatGPT privately is valued at $1 trillion. Anthropic valued at $350 billion, and they're announcing that they're going to invest $30 billion in compute. I mean, as a reminder, a lot of these companies, in the background, they're $10 billion-ish companies. Nebius a little higher at about $20 billion, but these are $10 billion-ish companies, and you have one single chatbot telling they're going to invest $30 billion in compute. So to me, we're at the beginning of a massive investment cycle, and I think a lot of the Bitcoin miners are going to benefit and go the way of Iron, go the way of CoreWeave, and of course, Iron was sold off a little bit, but CoreWeave was especially sold off hard. I honestly, the more I've looked at this, the more I think that my one theory about, the paychecks not being paid and the paychecks finally hitting their accounts yesterday and today and tomorrow as well, they will be hitting their accounts. I think that means that liquidity is coming back. The government, the government is the largest enterprise in the history of the world, right? They raise $5 trillion in taxes. Think of taxes to the government are like revenue to a company. It's a $5 trillion revenue company, and they haven't been spending anything for 45 days. And so that drained a lot of liquidity. And I think that's the underlying reason. But again, I don't know. We don't know. We've had a freak out in the market that, I think caught everybody off guard. It certainly caught me off guard, that freak out in the market. But I think, and I hope, and I hope, of course, that we're getting out of it, of course, for all of our sakes. 2025 turning out to be a tougher year than most of us thought. We had April, Liberation Day, and then we had this. So that's a tougher year than most people thought, right? 2024 ended up being a better year. Anyways, Solana Digital Asset Treasury companies still in a world of hurt. As you know, on this channel, I don't follow ETH as much. I tend to believe that a lot of the value of ETH is going to go to Coinbase. I think if you believe ETH is going to be a thing, you should look at Base, and Coinbase is where the money is going to be made with ETH. At least that's my take on ETH. But that's different for Solana, of course. And Solana, these treasury companies, these are the two main ones, Upexi and DeFi-DV. DeFi-DV is trading at a basic MNAV of 0.73, and Upexi is trading at a basic MNAV of 0.59. And that is after today's epic bounce. Well, I guess Upexis especially, right? DeFi-DV actually lagged Solana for the day, but after this bounce back, these big bounce backs, you can see these companies are still trading at 40 and 30% discounts respectively to how much Solana they have on their bag. And not to mention, of course, they earn a yield on this. They earn roughly a 10% yield on these assets under the hood. So to me, the market has gone too far, and it's gone too far. Not just on Bitcoin, not just on the treasury companies. It's gone too far on a lot of the small cap hyper growth stocks that I cover on this channel. Like for example, LifeMD. Earlier today, I covered LifeMD. Went too far on LifeMD. I'm sorry, LifeMD is too cheap. Look at Oscar, another small cap that's getting battered. Gone too far. The market is just so blind. We're caught in like basket trading, in index trading, and the market's just throwing out the baby with the bathwater. At least that's the way I think about it. This has gone way too far, way too far, way too low. I think we're overdue for a rebound. If we may get it tomorrow after market with the NVIDIA earnings, hopefully. So anyways, this was not investment advice. This is not financial advice ever on this channel. This is only entertainment. I'm an entertainer. I entertain. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.